Okay, starting a business, having a business. It's getting a little people quiet.
It's very bright in here. Taka?
There are many people that started businesses.
You want me to lower my head? Like that?
There are many people that started businesses. They come to us, lawyers and accountants, and they say, you know, when I started a business, when I'm in the middle of a business, I wish I would have known this from a legal and accounting perspective. You know, it's like a house. Without a foundation, without the right foundation of the house, if it's not built properly, then the top floors could be decorated as beautiful and most expensive, but the house will crumble. So what we have today is we have great panelists, a couple lawyer and accountants, and we're going to give you some foundations to succeed from a small business perspective. So first we have David Posner over here.
Good afternoon.
David Posner, partner at Zeifmans. David is a guru in tax, and his specialty is, you know, tax is very complex, but if you could take tax and dumb it down to like simple lawyers like me, then you know it's successful. So that's David Posner. Then you have David Handelsman, who specializes in both U.S. and Canadian tax. That's quite unique. H&H, Handelsman and Handelsman.
Woo!
And then you have Zev Zlonik. Everyone knows Zev Zlonik.
That's quite an intro. I get around.
Tremendous.
Yes. But Zev is guru in real estate, and at Gardner Roberts, I specialize in mergers and acquisitions and business law at now Aird & Burles.
Hatzlacha in your new role.
Thank you, thank you, thank you. Okay, to start it off, we'll go to David Handelsman first. What are the types of entities or business structures that are most advantageous for small businesses?
It's a good question. Generally, there's four types of ways you can own a business. Entities, you have the trust, that's generally not used to you to own a business outright. You have a partnership, which is great if you have other partners. It gives you flexibility. Each partner could really do their own thing if you're structured with a partnership instead of a corporation. If you're a corporation, then you're really tied down to your partner. And then if you're going out on your own, you could be a sole proprietorship, not incorporating, just running your own show. Or you can incorporate, and that's the question that a lot of accountants, a lot of lawyers get. You know, I'm starting out, do I set up a corporation? There's kind of a myth out there that, you know, if you're starting business, you have to incorporate, you have to have an incorporation. So my view generally is that if you're starting a business, you need a reason to want to incorporate. I would think the status quo is sole proprietorship. Fees are cheaper. You don't have to pay accountants that much. You don't have to pay lawyers. Banking fees are cheaper. One of the main advantages of being sole proprietorship is if the business fails, and businesses do fail, losses that you have from the business you will be able to use to offset other income either that year or next year or in the future years. But if you have a loss in a corporation, you're kind of locked in, and that loss is really going to be difficult to access. So if you're starting off a business, I would say unless you have a reason to incorporate, stick with sole proprietorship. Well, one of the main advantages, I think, from an accounting purpose to incorporate is something called the deferral. You know, in Canada and in most countries, they have two levels of taxes for corporations. The corporation will pay a low level of tax. In Canada, that's around 12%. But when you take the money out of the corporation, you're going to pay another 30, 40%, whatever it is, to bring you back on par with what you would have paid if you would have earned that income personally. So if someone is making a lot of money, they have the ability to, you know, keep money in the corporation and not to take it all out to pay for their personal needs, then yeah, there is an advantage to incorporate. But till you reach that point, if all the money that you're earning you really need to pay off your mortgage or your other personal expenses, then there's really no tax savings to incorporate.
Zev?
I think when it comes down to the question of whether, you know, I incorporate or whether I continue my business as a sole proprietorship, and this is, I think it's a question also whether you have a business yourself, you're starting a new venture, or you already have an existing business and you're starting something new within that business, or you're purchasing an asset, whether it's real estate or something else. There's always risk mitigation and mitigating and segregating liability. So I have my, you know, primary company, I'm starting a new venture, or I'm starting a venture on my own. Do I incorporate or do I assume that within my existing business and within my existing company? So if I'm the sole proprietor, I'm working on my own, One of the benefits of incorporating, obviously, is there's a limit of liability. There's certain liabilities, government-based things that can seep through to a director, but ultimately, liability stops at that corporate level. Similarly, if you have different elements of your business and you're buying a new asset, you're buying a piece of real estate, you incorporate a new company to hold that asset, because that shelters the rest of the mother company, let's call it, from that specific asset. So at the end of the day, I think it's a cost-benefit analysis. The benefits are mitigating liability, some of the tax savings, sheltering income and things like that that you can do within a corporation. The cost, obviously, is the fact that every time you have a new company, especially if you're just starting out, there's the initial costs of setting the company up, which are the legal costs, and then every year there's the annual maintenance, which is the financial returns, tax returns, your accounting costs and things like that. So it's something to take into account. There's other, obviously, you can get into limited partnerships and trusts and things like that, which is a little bit more complicated as your company grows as well.
I always say, don't let the tail wag the dog, and this is where the accountants and lawyers have a little bit of fights, but incorporating, whether it's a company or a limited partnership, you're just like Zev said, you're shielding yourself from liability, and if you're a sole proprietor, yes, you may get tax losses, but at the same time, for the $1,000 or so that it takes to incorporate and whatever the accounting fees, you do save yourself thousands of dollars if there's litigation, if there's payroll and whatnot that you haven't paid. So keep that in mind.
$1,000. I'm coming to you to incorporate.
It's pretty good.
I thought that was your rate.
That's hourly.
Okay.
Family rate.
Okay, David, I call him David Schmuel, but he always says you gotta start it right from the beginning. So here we're gonna have from an accounting perspective, someone's starting a business, someone's changing their business. You say get it right from the beginning, set yourself up right. What should they do?
Very true. So one thing you see, it doesn't matter if you incorporate or you're a sole proprietor or however you want to go about it. A guy goes and he starts a business, and he wants to claim expenses, write things off, and he has expenses that's going through his personal bank account and his wife's and his nannies and his aunts and his shiksas and everything. And when it comes time to getting things right, everything is scattered everywhere. Nobody really knows what's going on. And a year passes, 2 years passes, he has all these expenses. We want to help him, we want to be creative and aggressive. Well, if you want to be aggressive, I do, and then guy has no idea what actually happened. So at the end of the day, whether you're incorporating or you're doing a partnership, start it off right. Before you do your first transaction, have a separate bank account, have a separate credit card, however you want to do it, and use specifically that account for anything you want to say relates to the business. Happens all the time. These guys dump crazy amounts of paper and they don't know what's flying a year or two later. Get it right, have a separate account, and even if the bank won't give you a separate account for your business or the credit card, designate a credit card or account in your own personal name and say this is business, and everything you put through there, whether it's right or wrong or risky, in your mind, business. And this way, when it comes to the bookkeeper or the accountant or the lawyer later, we all know what happened. Get it right and separate it from the beginning. That's, I think, a very key point, and my staff struggle when clients, it's the Schwer's account and he paid for this, and just get it right from the beginning. Your life will be much easier.
Yeah, I'd also like to point out that it's important to keep receipts. Credit card statements.
Yeah.
I heard of a story, I can't verify if it's true, but someone was audited and we were showing him all his ESSO and his gas credit card statements, $80, $90, and the auditor's like, well, how did I know you didn't buy 60 chocolate bars that day? You're like, come on. Mm-hmm. They're like, no, where's the receipt? So it's very important to keep receipts. What I do is I keep my bank statements, my credit card statements in my drawer when I get
So
receipts.
I can't write off my chocolate bars?
Only some of them, not 40.
Chalavakum. But just on that, I've had a conversation with someone from a CRA, and they see you spent, Petro-Canada or Walmart. It's clear what you spent. It's obvious. You got gas. It could be smokes. It could be a lottery ticket. And it doesn't work. CRA does not accept credit card statements as receipts, okay? Because they don't know what you spent. So, and you don't have to keep a shoebox of papers, scan it somewhere, whatever you want. But like David said, exactly, the Visa, you still should keep the Visas and the Amexes and all that, but make sure you keep receipts.
Just talking about receipts, so I had a client that filed an HST refund for well over $300,000. I told him, you're going to get audited, and sure enough, the letter came and audited, and I told him, the CRA asked, send us your 10 biggest receipts. And I'm looking at these receipts that he gives me from his construction business. They're written out to the wrong name. Some of the receipts don't have HST numbers. And I told him, this is not going to fly. You have to go back to all your suppliers and you have to get proper receipts. And what I would advise is we have to be knowledgeable what is a proper receipt, because a lot of people that are in the industry don't know. If you get a receipt without an HST number and you send that in for an HST audit, you're not going to get credit for that. The CRA has a website you could check, put in the name of the person that you received the receipt from, put in the HST number, and the CRA will tell you if it matches. And that way you can make sure that you have proper receipts. Another thing also, just to mention what David said about starting a business, in the first year of a business, the business doesn't have to pay installments. Generally, we all have to pay installments for payroll, HST, corporate, personal tax. But the first year, there's no installments, and people starting a business don't realize that April is going to come. Your year end is going to come whenever it is, and you're going to have a big, possibly an HST balance and a corporate balance, and you have to make sure to put money aside, because the first year there's no installments, and you kind of get dinged twice, because you're going to have to start making installments for the next year, and you have to pay off your balance for the first year. So just bear in mind, I'm not telling you to pay the CRA early, but bear in mind there's going to be a time where you're going to have to pay that up, and make sure you have access to the funds. If I could just make a note about HST also, for people starting businesses, if your gross income is less than $400,000, the CRA offers a method called the quick method. And the quick method allows you to file HST. You're not allowed to claim any HST credit except on larger expenses like a car or capital items. But you only have to submit to the CRA 75% of the HST that you collected. So if you don't have a lot of expenses, that's a real savings. 25% of the HST that you collect could go into your pocket.
Zev?
So I think when you're starting a business or anything for that matter, from a contractual perspective, it's fundamental that you have proper precedents and proper documents in place to use. And that's whether you have employees or contractors, and there's always a difference between the two, and that can be discussed. But you have to have those agreements in place, and because there's certain fundamental elements of them that are important. Confidentiality clauses, non-competition clauses, assignment of IP if you're a venture type company where there's technology involved. You want to make sure all that's going to be assigned and someone's not going to come back to you afterwards as an employee after they're fired and claiming that they have an interest in things. So there's a whole host, and we can get into shareholder agreements, partnership agreements at some point soon. Generally, I get asked questions a lot about intellectual property. Starting a business, I've got this name, I want to register, I want to trademark, I want to patent, copyright, what's that all about? So I can tell you, it's a cost-benefit analysis similar to what we mentioned before. Trademarking is not cheap. Patenting is for sure not cheap. There is an element of predecessor intellectual property rights by just using a name. You have a website, your company's named a certain name, it's on your letterhead, you have some type of rights. It's not as strong as a trademark. When you get to a point where you've got solid cash flow, trademark then. Look into it then. Trademark your crest, your slogan, your name. Should it be in Canada? Should it be in the US? But doing it right at the beginning is costly. But it is something that you should take into account if your market's highly competitive. So certain contracts in that regard, your customer contract. Did you just pull something off the web or chat GPT? Is it going to protect you? All things being equal, you'll never have to look at any of these agreements and everything will go smoothly. But life isn't a TV show, and we don't all have that happy ending or the sequel.
What's a TV show?
What Zev said is so important. I mean, a number of things. But with respect to intellectual property, when I act on the sale of a business and someone started a business and someone creates code or does like a comic diagram, those things are all intellectual property. If you're ever turning around and selling that business, anyone who's buying the business is going to say, who owns this little logo? Who owns this code? And if you don't have your employees signing off on the intellectual property, waiving their moral rights, saying that the company owns that, you're going to end up paying twice. And we see it over and over and over again. So set yourself up right, get the right contracts in place. Of course, it's a cost-benefit analysis. Okay, so now we're going to move on. So we have a little bit of the foundation. We've set up the business. We're starting to run. This next topic is I'm very passionate about it. I lecture at Schulich on this topic. And it's the fundamental one thing that will hurt a business. And the question is, do you partner with someone or do you not partner with someone? So we'll start off with Zev. Let's pick a scenario. You set your business up, you've had this idea, you've created the product, it's starting to earn some revenue. Do you partner with someone in your business?
So unfortunately, I've experienced a ton of partnership disputes where and Yosef probably even more than me, where partners are just not getting along. And that can happen in 3 months, in 6 months, in 5 years, in 10 years. So, you know, if Yosef and I are partnering, you know, he's obviously the brains and the looks, and maybe I'm just decent at sales. But
you have better hair.
Should I agree?
What's that?
You have better hair.
Yeah, for now. For now. So, you know, we are partnering. You need to be absolutely sure that from the get-go that partnering with this individual is going to work, and we have clearly defined roles. Again, we're getting back to those agreements. You got to put in place that partnership agreement, that shareholders agreement. Not only does it have to have everything clearly defined from the beginning, what are our roles, what are our tasks, what's the payment structure, salaries and all that, but it's got to have solid exit strategies. If we aren't getting along, and again, it may not happen right away. It may be 5 years down the road. I'm putting in more time, you're putting in less time, I put in more money, we're just not getting along. What are the available and possible exit strategies? The last thing you want is to be sitting in front of a court-appointed monitor selling your business where no one's going to make money other than those lawyers, right? You don't want to get to that scenario. So you got to make sure that your shareholders agreement, your partnership agreement is rock solid. I mean, it's akin to a marriage, l'mashal. Right? It's akin to a marriage where, and there's times when you are sitting and talking and conversing with your partner more so than your spouse and your children. So it is a real relationship that has to be documented absolutely properly.
Just picking up where Zev left off about the marriage, I agree. And you should date, not the Hasidism method. You have to really know who your partner is. Not when dating, you know, we're a match. You really have to know who your partnership. Because if you go with someone that after 3-6 months it doesn't work, it's going to be very difficult to split up, and it's something that could have possibly been avoided.
Someone support for 3 years, right, in the business. The same guy does all the work. But the other thing just on that point is I guess a lot of people here are probably from the States, or they're Americans, or their wife's American, or and you'll get advice from your accountant or your lawyer about what to do in partnership. But people living in Canada that are Americans should know that the advice you get from an American accountant or a lawyer, a Canadian lawyer accountant, maybe apply specifically to Americans or Canadians. But when if you are an American living in Canada, a lot of the rules change, and a lot of people do not know that, and they set things up because their U.S. accountant told them what to do, or their Canadian accountant told them what to do. But if you don't understand how the border works, it can be really bad after the fact. So one thing I see happens a lot is if you are an American citizen or you're anything American and you're in Canada doing a business, make sure you seek out professional advice first, someone that knows how to deal with these things. And it's important that sometimes you get an accountant lawyer that don't want to talk, they have egos and stuff like that. You make sure that your professionals talk to each other, because I've seen it's just be very punitive tax-wise if you're an American that does business in Canada and not set up properly.
So I just want to highlight in summary 2 of the points that were said over here, and it's so fundamental. When I ask the question to a bunch of MBA students, and I say, what is the most important thing to think about when you're partnering, they will always go and say, what are the financial metrics? How much am I giving up? What percentage of the company am I giving up? And what you heard here right now, please have it fundamentally etched in your brain. Anyone who does shareholders disputes will know that. It's like the lecture that I give is called Corporate Marriage, Avoiding Shareholders Disputes, just like both Zev and David Handelsman said. You need to not just only think about the financial metrics. You gotta think, can I partner with this person? Do you have the same goals? Am I getting along with the person? Because if you don't have that, your business will not succeed. It's almost guaranteed. Okay, so now we have a partner, or we don't have a partner, we're starting to make money. How do we maximize the amount of money that we could put in our pocket? Can we do income splitting? Guys, this is more of an accounting question. How could we not go to the CRA?
Take it away.
That was by the Harper days. I think by Harper you were able to income splits. Now we have our new prime minister who made sure that I think everybody is paying in the top rate, and income splitting nowadays are very difficult. Giving dividends to people that aren't active in the companies become challenging. It's a challenge to be able to income split. There are methods when it comes to a corporation of how are you going to pay yourself, so to say, for the money that you have to take out of the corporation. And you can't just borrow from a corporation indefinitely, because then nobody would pay the second tier tax that we said. Corporation pays one level of tax, which is a cheap rate, call it 12%. But then when you take out the money, you're going to pay another 30, 40, whatever the calculation is, whatever you're going to pay. And you have to be smart to know how to do it. So really there's two methods out there. You could take dividends or you could take salary. I'm more of a believer in wages and taking salary. One of the arguments for taking dividends is that when you take dividends, dividends is considered passive income, and you don't have to pay CPP, you don't have to pay into the Canada Pension Plan, which is becoming very expensive for someone that pays both sides of it. It's close to $8,000 this year. But I try to educate people that paying into the CPP cannot be looked at like a tax, because it's a forced savings, probably one that we wouldn't take if we had a choice, but it is savings, it's not a tax, and it should be viewed that way. So that's why I'm not such a proponent of taking just dividends to avoid the CPP. Some of the advantages of salary and things that should be considered when you decide what your salary is there's childcare credits is one of the biggest lucrative credits that we have. For people that are making low or medium wages, you could get back to 60, 70% of the daycare that you pay. But you're only entitled to daycare if you have wages. So you have to make sure that you and your spouse have wages, because if only one spouse has wages, you're not going to be entitled to that. You also want to make sure for U.S. citizens, there's the child tax care credit, which is around, for this year, is going to be $1,700 per kid. That's a lot of money, but it's a function of your wages. And if you don't have wages, you're not going to be eligible for that. So you might want to make the calculation before you issue your T4 to know how much wage it is, to make sure that you're maximizing your child care benefits in the States. And another way of taking out wages or taking out self-employed income is that for people that move to the States, which might happen to a lot of us, as we see for the 60, 70-year-olds, is that Medicare becomes an issue, and you want to make sure that you have health care when you're in the States. So for people that are U.S. citizens, there are ways to pay into the system. If you take wages or self-employment income out properly, over a number of years, you could pay into the Medicare system. So when eventually, if someone moves to the States, you will have some level of health care.
Okay, I'll chime in. So yeah, I agree with everything David H. said.
Thank you very much, David P.
Thank you. That's definitely true. There's other things really depending on the magnitude of income that you have in the corporation and the amount of income that you need to actually take out. Sometimes you want to take out a salary and there's childcare, which is all true, but sometimes the top rate is like 53.7%, I think, and you really get hosed. So sometimes there are other ways, other more creative ways that I don't think I'd speak about publicly, and I wouldn't write down, but I'm just saying there are sometimes if you think that you're going to really pay a lot of tax, the 53%, and there's obviously you can pay your kids and your wife and you can send money offshore, stuff like that, but if it's a big amount, sometimes we have to go past dividends and salary, and there's other structures in place, and if you think that's important, you can always reach out to me or David or Zev or Yosef.
I've just been informed by a tax lawyer during lunch that as of January 1st, capital gain strips are no more.
Yes, that is
so
true.
We have to be a little bit more creative.
True. A little bit beyond the scope of this conversation, but Mascom.
Okay, so we're going to switch over to venture funding or raising capital. Very often businesses are going to require capital in order to run, and especially in the startup phase, people look for venture funds or high net worth individuals. So we'll start off with Zev. Zev, tell us how you could set up your business to get ready for that venture funding or funding in general.
I mean, you can start off right from the get-go when you're incorporating your company with different levels of shares and different options and things like that. I think one of the fundamental aspects, and again, I don't I think I'm constantly telling people what not to do, so, negative Zev, but, we're trained to see shadows in the corners, is if you are starting a venture business, technology or whatever it is, and you envision it growing into that billion-dollar company, which Amir Hashem next year we all will have, but if you're going to, that should be the goal. You want to ensure that when you are going public, you are not the next Eduardo Saverin Facebook story on the internet. So if you are building, as an example, let's say you're using algorithms and that's what you're selling, that's what you patented. You don't want some guy on the sale day coming and saying, you know what? All that code that is the basis for that algorithm, I wrote some of it, so I want 10%. So if you are going out there and starting your new venture and you had someone or someone's involved in that business historically, you need to make sure that they're signing over their IP rights. They're relinquishing all interests, all ownership interests in your company so that you know that you are the sole owner. On the flip side, like what the two Davids were saying before in terms of sheltering income and tax advantageous strategies and things like that, if you're going to be giving out shares to your spouse and your mother-in-law and your adult children and your friends and this and that, they are now owners of your company, which means they are entitled to rights, which means that if later on in the day you guys aren't getting along, they could cause real issues for you. And there's ways to give people benefits of a company without actually giving them shares, without actually giving them pure equity, profit participation, or other types of strategies and structuring that you can do. But you need to be very sure that if you're setting yourself up for a venture type business in the future and a sale in the future, that you own everything, whether it's the IP itself or the ownership itself, or at least everyone else doesn't have any control or has very limited equity rights in the company.
You guys want to chime in? No? No. So yes, very, very good points that Zev said. A couple things to think about on the venture side. Anytime that someone is going to invest in your business, they're investing in you, and they want you to be at the helm of that. So you have to be careful that before you go into venture funding, you make sure that you have enough skin in the game, because when people are just giving money into the company, they want to make sure that that money is going to be put to great use. And don't necessarily give too much of your company away too quickly, because as your company grows in value, the price of per share is going to continue to go down. So don't give up too much. Think about it. Be smart.
I'll add something to that. Sometimes I find where lawyers and accountants don't necessarily agree, and that happens it happens often, but a lot of times accountants will say, or I'll say, we want this person to own the shares, but we want him to necessarily be on title for all of the shares, but really we want, his wife to own something, and accountants will come up with different ways how to save funds, and we're kind of putting beneficial shares in title to somebody else. And the lawyers have definitely seen where that goes sour. I've seen it go sour. So it's important, if you want to do that you speak to both sides, because sometimes the accountant is very overly aggressive in what they want to do to save the tax, but the lawyers will step in and say that's crazy because these two people are going to fight one day. So it's important to kind of bounce ideas off of both of us.
Okay, so before we open it up to questions, we'll ask each one of the panelists, if your son or daughter is going to be starting a business, what's the one piece of advice?
What did I do?
Drop my phone.
We'd be the last people they'd ask.
Yes. What's the one piece of advice that you would give to someone starting a business? Zev?
So I guess, how much money do I have to put into this business of theirs? And I have limited black hair on my head left that's going to turn gray. But I think it comes down to, again, if you're going to be partnering, make sure that you know your partner and they're someone that you can and want to be with long term. Make sure you have all your agreements in place, whether it's your ownership agreements, your employment agreements, your customer agreements, your IP agreements. Make sure that's all in place. And I think fundamentally, if you have questions or concerns or you're not sure about something, I think that's one of the amazing things about the H3 initiative generally, is that we have a massive network of people now at all levels in all professions that you can reach out to. So from my perspective as an example, I'm not speaking for my other panelists, but if anyone out there has legal questions based on what we're discussing or generally, you can look me up. I'm fairly easy to find, Zev Zlotnick. I'm at the bottom of the alphabet all the time. Go to the website, find my email address, reach out, ask me a question, or questions if you're not sure about something about your existing business, incorporating, whatever the case is, I'm always, happy to help out. And, when you're up there with your billions making money, we'll all make money off you. But please don't hesitate to reach out.
Same here. I think that applies for all of us.
Don't hesitate to reach out, and don't hesitate to reach out to network. You'll find that there's a lot of people that are willing to
reach
help.
out for advice.
And reach out to all of us. We'd all be happy to help after, whatever you want.
David?
I think being a mensch is 50% of being successful in business. Being a mensch means if you get an email, respond in a timely manner. You have to decide a day, 2 days, whatever it is, and responding, it's going to take me a couple of days to get back to you. That's a response. But the person that sent you the email knows that you received it, and they know that you're onto it. I got help. Most people here that started a business or successful in a business got help. People give you referrals. Get them a box of chocolate, buy them a box of wine. Beside being menschlich, that shows them that, yeah, this guy likes referrals. He really appreciated it. I'm going to mention his name a little bit more. I think also it's important, at least me, I work in a very small firm, that you got to be friends with people in your industry. I know that you're competition, and it's not going to work for everybody, but I'm stuck a lot. And, if I call on people, I call on other accountants. What have you had the situation? What are you doing? I'm happy to say, at least my feelings are, we're all a close group. We don't feel that we're stepping on each other's toes, and we help each other out because we're all in that point that we need help, and your competitor is really the one that's probably going to be able to help you the most.
It's true. Okay, what I would say is before you start a business, it's a nice group here, so I would say number one is no matter how hard you try, the Eibishter, it's all up there. So you have to understand
Amen.
that, It all comes from the Eibishter. Now, after we acknowledge that and we all truly believe it, we have to truly believe it, is that be organized, don't be scattered. You got the guys that they try to look, I'm not speaking to anybody particular, but they work hard and they try to show that they're successful. But when you ask them questions, basic questions about their business, what is this, they can't even answer it. And because they're just not organized enough. So I think I said this at the beginning, start off right, be organized, don't be scattered, zerflogen, nothing of the sort. And if you start it off, people can help you, you can help them, get it right from the start. Don't wait 2 months or 6 months or 2 years, get it right from the beginning.
Excellent. I would say, just to add, someone who's starting their business, they're good at what they do. So I would say surround yourself with good people, just as what our panelists said. Surround yourself with good people, but have that confidence. Know that you're good at what you do. I was going to say, of course, Parnassa comes from the Eibishter. David highlighted it. But when you have that confidence and you truly say that Parnassa comes from the Eibishter, that means that this must be your shlichus. This must be what you need to do. So have that confidence. Surround yourself with good people. Ask for advice when it's needed, and you know that you're going to be successful.
I just want to add one point is there's a fine line between arrogance and confidence. You want to show that you're confident, whether you're meeting a new client or a potential client, you're going for a job, you want to show that you're confident. You don't want to be a schlepper, you want to be confident, but you don't want to have arrogance. Try to kind of master that fine line, and it should get you very far.
Okay, we have a couple more minutes. Anyone have any questions?
Go for it.
At what point does it make sense for family trust and tax savings?
So let's repeat the question.
Here.
No.
What point does it make sense for trust, family trust? So right now, it's a complicated question, but right now the main point is that there are various rules that discuss when you can share income with kids, and your wife. And if you are earning significant passive income where it's really taking you to the top rates or very high rates, you can create a family trust, and that's one of the last tools left where you could lend money to a trust. The trust can invest in mutual funds, stocks, or bonds, and that income could be taxed at the children's rates, which if they're each getting 20K, let's say they're getting $15,000, they're going to be paying like 22% tax. And actually, the first $15,000 around is tax-free. So at that point, the savings, especially if you have 3 kids, 4 kids, it adds up. But I don't believe, I'm very against when people they want to create a trust and a corporation and another corporation. Just the compliance fees are very burdensome. Cumbersome, I think that's the word. So make sure it's worth it. Don't just go running and creating things. Run the numbers, and I think if there's significant passive income, that's the time to create a family trust. That's really the only tool that's still left.
And if I could just comment on what David said is, us in the Jewish community, I think we have more the ability to use this trust because the income that you allocate to your kids really should be used for your kids, what's the right word? For the benefit of your kids. And Baruch Hashem, we have very high tuitions.
Yeah.
So I think it would be for, with the camps and with the tuitions, I think the argument could be made that, $15,000, $20,000 of discretionary income is really being used for the kids' benefits.
Yeah, but a trust, there is a compliance burden. So it's definitely could be worth it. I'm sure people in the room can say that, but I wouldn't just do it. Don't run to create anything before you actually run the numbers.
Any other questions?
Come on.
This is free tax
Uncle
advice.
Ami, you have something to ask?
Oh,
No?
right over here.
Why should a business hire a professional? Especially if there's a new business, they don't have the cash and paper, accountants or lawyers.
Just use ChatGPT.
Are you talking about a professional from an accounting tax point of view? Or
I think he
from
means
an-
like if you're a startup business, why do you need an accountant? Why do you need a lawyer?
If you're starting a brand new business and there's really not a lot going on and it's very basic, I would tell you, like, people will come to me and I'll say, I don't think it's worth to come to me. I'll happily have a schmooze with you to guide you, but I don't think it's worth coming to me when there are other people that are probably, better suited for it. You should have somebody, it doesn't have to be a licensed professional, but there should be somebody that knows what you're doing. If you don't understand basic accounting, which most people don't, you should go to somebody that understands it. And there's people, they don't charge very much, but you have to get something of that sort, because then you're lost. Totally lost. Because if you're a guy that sells pencils, you don't know anything about accounting, so you're going to have to file your taxes and you won't even know where to start. So just to get a basic bookkeeper or somebody that has basic experience, I think is very important, at least for accounting and tax wise.
Just off the cuff, if I could add, if everybody's listening to what Zev keeps on saying, ChatGPT. ChatGPT?
Sure, absolutely. I
For
use it
any-
from my bio.
I don't even know what that is.
So anybody that's Googling out there, you gotta try ChatGPT. I personally like Microsoft Bing. It is amazing. I'm not on Google anymore. I actually just celebrated my anniversary with my wife, and I put in ChatGPT, please write an anniversary card with my wife. She's a teacher, we got so many kids, we
She's a
travel
great
here
teacher.
and here. 4 paragraphs, a solid anniversary card. I gave her a real one also, don't worry. But it was you gotta go on it to check it out because it's really amazing.
Okay, one more question, last one?
If you work in the U.S. and you're a sole proprietor, you live in Canada, would you suggest incorporating becoming an S corp in the U.S. so you can avoid CPP and not get hit from the CIA?
That's a David Handelsman question.
Did you get the question?
I'm out.
But say, as soon as you
One more time, I'm sorry. It sounds like a very technical question. You're more than welcome to call me in the office, and I'd be happy to discuss it with you.
Okay, so like Zev said,
416-785-1070.
like Zev said, feel free to reach out to any one of us if you guys have any questions now or later, or starting a business or continuing a business. Thank you for listening, and
Hatzlacha Rabbah.
Amen. That was amazing. I'm sorry for...